Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Good morning. Today will be Thursday, the 20th of June, 2024. So before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree, pardon me, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so yes, so before we start over here, I just do a sound check so that I hope that you all could hear me. Yeah. Okay, just do a mic check. Mic test 1, 2, 3. Okay. Okay, I hope that everything is working fine because just do a quick check. Okay, so I guess it should be fine. Yeah. All right. Okay, so everything's working fine. So I think we could proceed over here. Okay, so before we jump straight into today's short-term intraday technical outlook on the various cross asset classes, and for today's special, I will include one more US dollar major pair due to impending major economic data news that will be out later during the European time zone. So before we go into that into greater detail, let's have a recap what has taken shape yesterday. So as we all know that yesterday is a rather quiet session. Why? Because the US markets, particularly the stock market, is actually closed for a public holiday. So given the closure of the US stock market, there is not much movement impact on the other cross asset classes as well. So with that over here, I will actually do not talk much about the movement of the yesterday's cross asset classes because it's more or less kind of muted yesterday due to the closure of the US session. Now let us jump straight to the fundamentals and the intermarket dynamics now I share with you all for today. So the current intermarket dynamics right now, I want to focus for today, primarily we focus on the FX market. Why? Because something very important that is actually taking shape right now in terms of the various dollar movement pair. Okay, so this is what I mean. So if we will jump straight into the 5-day rolling performance, okay, of the FX market based on the current price action. So basically what I'm showing you guys over here is the 5-day rolling performance. So it's a very short-term 5-day rolling trend of the dollar major pair. That means the dollar, using the dollar as a base currency against the other major currency like the yen, the kiwi, the sterling, the dollar Chinese yuan, the dollar Sing dollar, the dollar euro dollar, the dollar CAD, the dollar Aussie, and as well as the dollar Swiss. That means $1 equals to how many worth of this currency. All right. So what we could see over here is we start to see a very stark, interesting performance of a crocodile mouth getting wider. Looking at the dollar yen, that means the dollar yen continues to be rather firm. That means the dollar is firming against the yen. That means going to be firm. But however, the dollar continues to weaken against the Swiss currency, the dollar Swiss. All right, and it starts to trade rather sideways against the other major pair, especially against the dollar CAD, the dollar euro. And most importantly, what's interesting over here, if we start to see the dollar gaining strength against the sterling pound. So what's interesting over here is that yesterday, I shared you all in my intraday daily technical outlook on the pound against the dollar, because that's how the currency is being quoted up when we start to do into a trading world. Well, but this is for the sake of analysis, I plot the dollar against the sterling so you could see clearly where is the dollar strength movement against the other currencies. So the sterling pound over here yesterday hit a resistance level. So that was the resistance level yesterday. I highlighted exactly for you all that the level has been hit and it's at the 20-day moving average, then thereafter it's just traded sideways right after at the start of the US session, going nowhere. Why? Because of the closure of the US stock market yesterday. That doesn't cause much movement in the including the FX market as well. And thereafter, later I'll share with you all, there'll be an interesting economic data that is out later related to the sterling dollar. All right, so now let me focus on the weakness of the dollar against the Swiss franc right now. So the rationale over here is that the dollar Swiss has been very weak. That means we start to see a weak dollar against the Swiss franc. That means, i.e., we can talk about it over here is that the Swiss currency is actually strengthening over here. So if I will share with you all how do I actually look at things over here is that there could be a potential safe haven play in the Swiss currency right now, primarily driven out from the Eurozone or the European Union due to this upcoming French legislative election that has been covering since late last week. When will it be happening? It will be on the first round will be on the 30th of June. All right. So for guys, you want to actually have a quick recap again, you can just Google French election 2024. So you're able to get the dates. All right. So the first round will be on 30th of June, followed by the second round, 7th of July. So what's going on over here is that right now there is actually an increased odds that the right-wing party within the France parliamentary parliament, that is led by Le Pen, the famous, those who actually know, Google Le Pen, L-E-P-E-N, you're able to understand more about her. So she is more of a right-wing party, and she's the leading party. Her party called National Rally. Very likely, they will gain a foothold in the upcoming French legislative election. So this is not the president election, but if they gain a foothold in this legislative election, very likely the current president, Franz Macron, power will be diminished. And France President Macron party, he himself belonged to the centralist party, which advocate for much more European Union perspective, or the Eurozone Union perspective. That means embracing fiscal discipline. All right. So, but however, the far right party in France, that means i.e. Le Pen National Rally Party, tends to advocate more expansionary fiscal spending. That means that will i.e. increase the France budget deficit, which potentially could lead to increased credit risk of holding long-term French sovereign bond. And that credit risk tends to actually has been increasing since last week. And how do we know about that? By looking at this particular chart I'm going to share with you all, is the yield spread between the France sovereign government bond against the 10-year German government bond. All right. So now let me open up that particular chart for you all. Okay, give it a bit of time. Okay, 1 second. Let me load it. Okay, just give me a minute. Let me open that chart for you guys. Okay, so it should be here. Yes, this is the one. Okay, give it time to load. Yes, this is the one. Okay, so this is the top of the chart. Okay, let me expand it. Okay, so I could see over here is that this is the weekly chart. So ever since this was last week and Friday, it did a bullish breakout, and now it went to almost a high of 0.81%, 81 basis point. So that was the highest level last seen in August 2012. All right, so that is a significant milestone. By after this bullish breakout, a spike up in the yield spread of the 10-year France sovereign bond against the 10-year German sovereign bond. That means market is still assigning a higher credit risk factor in owning 10-year France sovereign bond due to the fact of that increasing possibility of the France right-wing nationalistic National Rally Party that will gain a foothold in the France legislative election, which in turn will lead to an increase in physical spending in France, eventually widen the budget deficit. So one budget deficit widen in France going forward. In order to cover this budget deficit, the France government got to increase taxes somehow or another down the road in the longer term future. So that actually doesn't gel well prospect for growth prospect within the Eurozone. And do not forget, the France itself is one of the anchor economy in the European Union and as well in the Eurozone. On top of that, that include Germany next over here. And this is the weekly chart. If I will start to go down to the daily chart perspective over here, notice that it starts to actually inch upwards after Monday pullback. All right. So this represents a heightened political instability will lead to an increase in credit risk in the France economy that lead to what I call the ongoing safe haven play in the FX market. So that actually explain why the Swiss currency is so strong right now against the dollar. All right, over here. So now back to the fundamental linkage between this. Well, as we know that the Switzerland central bank is the first central bank, the Swiss bank, which is SNB in short. They are the first central bank among the developed nation that ignite the interest rate cut ahead of ECB. All right, so they actually ignite the first interest rate cut in March this year. And if you look at their current benchmark interest rate right now, is only 1.5%. So how do I know that? If you go to the economic calendar, if you go all the way down over here, today will be Thursday. Okay, it should able to show the Swiss. Where was it? Yeah, over here. Yes, SMB. So this is it. So they will actually do another interest rate decision today. Okay, bear in mind, SMB is a bit different from the rest of the other developed central bank because the rest of the developed central bank hold their interest rate monetary policy decision either every month or every 2 months. But for SMB, they hold it every quarter. So the previous one was done in March, where they historically cut their first interest rate cut ahead of ECB and ahead of Fed and ahead of Bank of England and even ahead of the Bank of Canada. So they cut it by 1 basis point to 1.5%. So right now, market is actually pending another 25 basis point cut. All right, over here. But if that's the case, why is it not reflected inside this dollar yen rate right now? Because if the market has really expected another 25 basis point cut over here, the interest rate differential between the dollar and the Swiss franc should actually widen. Why? Because the Fed funds rate is still holding at 5%. And given that the SNB is about to cut this week as being expected by the consensus, this dollar yen gap should actually, this dollar Swiss franc gap should actually go up over here. All right. So the reason why over here is that this cut itself, that is market that is being expected right now based on the consensus forecast as polled by Trading Economics, it's not 100% certain that it will go down to 1.25%. Why? Because the current SMB officials public speeches ahead of today's meeting is rather mixed. Okay, why do I say that? If I were to scroll down over here, let me share with you all. Okay, there was this reason. Okay, case for a pause. Okay, there is a little heading on share with you all because based on the okay, where was it? Okay, because there should be somewhere, there's a little footnote here on the share with you all. Yeah, this is the one. Jordan. Okay, Jordan is the SMB president. So in his most recent speech, right, he did mention that he said a 2-week currency is most likely source of higher Swiss inflation. All right. So it seems to us that the SMB president thinking is that if the central bank, SNB, the Swiss central bank, were to actually further another interest rate cut, that will bring the yield differential, the short-term interest rate differential between the US dollar and the rest of the world get widened. Okay, so if that gets widened over here, we will start to see the dollar and other currency strengthening against the Swiss. That means the Swiss will get weaker, but that is not in its favor. Why? Because a weaker Swiss, too weak of a currency, likely will start to drive up higher imported inflation, which is not desirable based on his last public speech over here. So overall, I would say that there is some camps within SMB that is favoring for another cut, but there's another camp potentially out from the leader, which is the SMB president Jordan, based on his last public speech, that he's not in favor of a weaker Swiss franc. Okay, that will actually come potentially if they were to cut today. All right, so it's a rather, I would say that it's not 100% certain that there could be a potential cut as being pulled by the consensus by trading economics, looking for another 25 basis point cut over here. All right, so this is the intermarket analysis that I'll share with you all. The current number one, Swiss strength that we're seeing right now is also two factors that is driving it. One, potentially safe haven bid due to this ongoing potential increased credit risk that is being seen in the French 10-year sovereign bond due to political uncertainty surrounding the upcoming French legislative election. And secondly, over here is due to very mixed messages coming out from SMB officials ahead of today's SMB meeting. All right, so this is the intermarket correlation, the intermarket dynamics I'll share with you all that is taking shape in the FX market right now. Okay, nothing to share on the stock market. Why? Because of the closure of the US market yesterday. Now, with that, let me now jump straight into data releases. All right, what are the data releases, fundamental data releases that took shape yesterday that could impact another key economic event that is taking shape today as well? Okay, so let me touch on the data releases yesterday was related to UK. So yesterday, UK released the inflation number. So the UK inflation number continues to show signs of inflationary deceleration much faster than what we see in the US. So if you look at the core inflation rate over here, they continue to inch down lower, 3.5% year on year within market expectation. So market and also below 3.9% year on year that was printed in April. So if you look at the core inflation trend in UK, it's been slowly deceleration since June last year. All right, and the 3.5% is the lowest level since October 2021. So you look at the 5-year trend, very clearly it continues to decelerate at 3.5%. And if you look at the services inflation in UK, okay, it has also gone down significantly as well at 5.7% year on year in May. That's much, the rate of deceleration is much more significant compared to US, all right, that is still showing no signs of this kind of deceleration of movement. So overall, what we could see over here is that supports the BOE thinking of guiding market participants based on their previous Bank of England monetary policy meeting since March this year. They have started to shift towards more of a dovish tilt, guiding market participants for at least a potential interest rate cut in before 2024 ends. So what we could see over here is that there is the Bank of England will meet today as well. All right. Okay, where was it? Yeah, Bank of England. So it will meet much earlier compared to SMB. So SMB is 3:30 p.m. Singapore time. Bank of England will come in at 7 p.m. Singapore time. So what market is expecting is that, yes, despite the fact that we start to see very clear inflationary deceleration trend in UK, both from the core inflation and the services inflation trend that I flashed you all earlier on, but market is expecting no change today at 5.25%. Why? Because due to the upcoming UK snap election that is going to be held on the 4th of July, okay, which is close to about 3 weeks from now. So given the fact that the reason why market is not expecting BOE to cut, because BOE will try to be what I call indifferent to whatever party policy speeches that's being advocated by the Conservatives or the Labour Party in UK, because they don't want to see swaying to the current government right now in helping them to gain votes. So they try to be as independent as possible by holding interest rate at a similar level in today's meeting, and they will very likely to only start to ignite potential the first interest rate cut after the UK presidential election, after the UK snap election after 4th of July. Okay, then they will think about that particular situation. So if you look at the Bank of England interest rate decision, okay, they have held it so far since August last year. So the next meeting will be in August. So right now, market is only expecting the cut to come in August. So that is also being forecasted by trading economics as well. All right. So, but however, in the monetary policy, we call it statement that will release later after the decision, very likely they will actually start to be tilt towards more of a dovish tilt as well, and that could also start to see potentially some signs of sterling weakness against the dollar going forward if that happens. And what could actually see a much more drastic sterling weakness against the dollar will be a surprise cut by BOE today, right ahead of the right ahead of the UK snap election that is going to be held on 4th of July. Okay, so something to look out for. So later I'll share with you the short-term technical outlook chart. All right. So with that, that sum up the fundamental and intermarket dynamics on share with you. Now let us straight jump into the current short-term technical outlook for the various cross asset classes, starting with the European currency. All right. So with that, let us take a look at the euro dollar. Okay. So the euro dollar continues to actually shape a series of higher low, as you could see over here, right from the swing low that was taken shape on last Friday. So with that, it seems to us that there is a little minor ascending channel that has taken form as the euro dollar continues to shape this potential corrective rebound after we start to see a 5-wave impulsive down move that broke below the 200-day moving average and the 50-day moving average. So what do I mean by that? We start to see wave 1, wave 2, wave 3, wave 4, wave 5. And right now it's doing a retracement of this 5-wave down move that could potentially take us up to the 50% mark over here. Okay, we do the Fibo retracement. Okay, it already hit the 38.2%, all right, on Tuesday itself, and yesterday it traded sideways but managed to held above the low of yesterday's. Okay, it managed to form a higher low yesterday. Okay, higher low. All right, we hit the 30%. So the next one to watch out for will be the 50% retracement, which is corresponding to the 200-day moving average as well. So with that, I will actually use a slightly tighter key short-term pivotal resistance, slightly tighter short-term pivotal support for today at 1.0710 level. All right, so as long as 1.0710 level holds, okay, we will still maintain this intraday bullish bias for this potential minor mean reversion corrective rebound scenario to unfold. Next near-term resistance to watch will be at 1.0770/1.0790, which corresponds also to the 200-day moving average and the 50% Fibo retracement of that last 5-wave move down. All right, over here, only above 0.790 may expose another extension of this ongoing minor counter trend mean reversion rebound to expose the next near-term resistance level to watch at 1.0815, which correspond to the 20-day moving average acting as a resistance. This minor swing high area of 13th of June and also correspond very closely to the golden ratio of that 61.8 Fibo retracement of that previous 5-wave down. But however, if today we start to see a swift now move and it breaks below the 1.010 short-term pivotal support level, then we will say that this mean reversion rebound more likely has game over, where we potentially start to see further weakness on the euro dollar. Next support level to watch will be at 1.0656, which is pretty key. So this 1.0656 considered as a medium-term support level. Why? If we pardon me, if we were to swift okay, if we were to actually put it on a daily time frame, this 1.0656 level correspond to this potential ongoing symmetrical triangle range configuration that is in play since the low of 4th of October last year and is now acting as a resistance at 1.0656, which is the lower boundary of this symmetrical triangle configuration. Okay, let me put it in hourly time frame. Let's see again. So if we start to see a further breakdown below 1.0656, then it will expose the next near-term support at 1.062, 1.0660, which is the congestion minor swing low area of 17th of April and 19th of April. Okay, so with that, very quickly, let us go to the sterling dollar. But before that, let me expand my screen first so that you guys could see. All right, sterling dollar. So you recall sterling dollar yesterday, we also do have a short-term intraday bullish bias. And yesterday, it managed to hit exactly at the resistance level that we highlighted, which is the 20-day moving average at 1.2740 level. And thereafter, it started to inch downward. But right now, there is one bearish element that I want to share with you has been flashed out by the hourly RSI. So if you look at the hourly RSI, previously, before the start of this rebound, there is actually a precondition that indicate that there could be a potential rebound that is unfolding after last Friday minor swing low area at 1.2660 by this bullish divergence. Okay, that was flashed out earlier on. And right now, if you were to actually link up the bullish divergence over here, okay, we start to see a bearish breakdown of this parallel ascending trend line that I drew on the RSI. And the RSI now is also inching downwards below the 50 level mark as well. So what it could mean over here is that at this point in time, the RSI has flashed out a bearish condition right now. So this gave me to lead me to a bit cautious of a potential further extension above 1.2740 of this ongoing minor corrective counter trend rebound that has taken shape since the start of this week on the sterling dollar. And the bearish condition flash out on the RSI coincide exactly on the test of that 1.2740 resistance that we highlighted yesterday, and also the 20-day moving average. So this give rise that this 1.2740 is indeed a pivotal level to watch. All right, so with that, I will use 1.2740 as a pivotal resistance ahead of today's key event that could influence the sterling dollar, which is the 7 p.m. Singapore time BOE monetary policy decision. So potentially it could float inside this range. Next support level to watch for today will be the bottom of the range over here, which is the minor swing low of last Friday and this Monday at 1.2660. Only a breakdown below 1.26660 potentially exposes the next near-term support at 1.2610, 1.2605, which is being defined by the former minor swing high area of 3rd of May and the rising 50-day moving average acting as a support as well. Only an hourly close, a bullish breakout above 1.2740 will invalidate today's short-term intraday bearish bias within this minor range configuration that I highlighted to you all. We'll see the extension of this ongoing minor corrective mean reversion rebound to expose the next near-term resistance level at 1.28 figure level. Above it sees the minor swing high of 12th of June at 1.2860 next. All right, so moving forward, today for the first time, I will cover the dollar Swiss because of the very interesting interdynamics I shared with you all on the on the Swiss franc earlier on, being the strongest major currency so far against the dollar. So what you could see, the Swiss franc over here on the hourly chart. Okay, before I go to the hourly chart, let us go to the daily time frame first, so that you guys have a bigger picture. So on the daily time frame over here, what we could see over here is that the dollar Swiss has very clearly broke below the 200-day moving average over here. And what we could see over here is that right now is in the process of doing this retracement to retrace this earlier push medium term uptrend from 28th of December all the way up to 1st of May. Right, and in the short term right now we could see it's going to involve within a minor descending channel since the high of 30th of May, and it has still some more room to go down to the lower limit of this descending channel. So very quickly, let us go back to the hourly time frame. Okay, the hourly chart over here, what we could see. So on the hourly time frame, we start to see a very pronounced down move since the start of this minor descending channel that I drew from 30th of May. And at this point in time, the RSI from 18th of June, which was on Tuesday, it managed to exit from its oversold region over here. And right now, it can't break above the 50 level mark as well. And what we could see over here is that upon exiting from the oversold region over here, there is no signs of a bullish divergence. All right, so indicating to us that whatever bounce that we got to see over here, potentially on the dollar Swiss, is more of a mean reversion corrective rebound within a short-term downtrend that is still intact, rather than a trend reversal of this short-term downtrend. All right, so as you could see over here, the hourly RSI is also being kept by a descending trend line as well. All right, so net overall, what I could do over here is that I will use 89 figure level as my short-term pivotal resistance on the dollar Swiss for today, which correspond to the upper limit of this minor descending, okay, not ascending, minor descending channel. Okay, I repeat again, minor descending channel. So I may say ascending a while ago because a bit of time twisting. So 1.0890 or 89 figure level, in short, will be my short-term pivotal resistance for today, which confluence with the upper limit of this minor descending channel that I drew from the high of 30th of May, and as well as correspond to the 200-day moving average as well. Okay, and also the former minor swing low of the 12th of June. So taking into account that over here is that potentially this could be a micro mini wave 1, wave 2, and right now is in the midst of doing a micro mini impulsive wave 3. All right, so in order for the wave based on the Elliott wave structure, for the wave 3 to continue, it shouldn't surpass the low of wave 1. And if I were to do the Fibo extension for you to look at into account of that potential micro mini wave 3 end level. Okay, my apologies, it's a bit not sure why is it so crappy right now again. Okay, let me delete again. Okay, 2 time. Okay, 2 time correspond to 8770. A breakdown below it exposes a kind of a Fibo extension cluster as well, and also correspond to the lower limit of this minor descending channel at 1.873087 figure level. Only an hourly close above the 89 figure short-term pivotal resistance will invalidate this intraday bearish bias on the dollar Swiss to see a much more pronounced corrective rebound to actually mean revert it towards the 20-day moving average that's acting as a resistance at this next resistance zone of 89.65 / 89.90 level. All right, which is also the minor swing high of 11th of June. Okay, so that's for the dollar Swiss for today. Now moving on will be the Asia Pacific dollar pair, starting with the dollar yen. So very surprisingly, the dollar yen continues to help firm against the dollar. So on the daily time frame, what I see over here is that there's no signs of what I call bearish condition as being advocated by the hourly RSI. The hourly RSI continues to remain firm by shaping. Okay, sorry, I don't know why is it so crappy. Okay, over here, it continues to hold above the 50 level and start to print a higher low, indicating to us that the short-term intraday condition still remains bullish. So with that, right, I don't want to, okay, so the first support level to watch on an intraday basis, okay, will be at this level here at 15760, but I don't want to tie it so tightly. I will use this rising 20-day moving average that also confluence with the minor swing low of last Friday at 15690. So I will use a slightly tightened key short-term pivotal support for today on the dollar yen at 15690 level. Still maintain that short-term intraday bullish bias on the dollar yen. A breakout above 15830 exposes the lower limit of that long-term pivotal resistance zone at 15950 level. Only an hourly close below 15690 will invalidate today's intraday bullish bias on the dollar yen to see it floating down to retest the 50-day moving average and as well as the minor swing low area of 13th of June coming to a support near-term support zone at 15880/40. A breakdown below 15540 expose further weakness to retest the minor swing low of 5th of June at 15460 next. Moving on, the Aussie dollar. So the Aussie dollar also continues to trade firmer as well over here, holding above the 20-day moving average within a medium-term symmetrical range configuration. All right, symmetrical triangle range configuration, pardon me. And also the RSI also managed to help above this minor ascending trend line support level, okay, indicating to us that the momentum in the short-term intraday basis still remains positive. So with that, I will do have a first support level to watch for today at 66.55, this level over here. And the key support level, I'll use it slightly tighter, which correspond to the 20-day moving average as well at 66.40. So as long as 66.40 short-term pivotal support holds in any minor pullback, we'll still maintain this short-term intraday bullish bias within a medium-term symmetrical triangle range configuration. The next resistance to watch will be at 67.10, which is the minor swing high area of 16th of May and 20th of May. Above it says 67.30, which correspond to the upper limit of the medium-term symmetrical triangle range configuration. Only an hourly close below 66.40 will invalidate today's short-term intraday bullish bias to see it floating downwards towards the 50-day moving average that is acting as a support level. But before that, we do have the next support level to watch out for will be this congestion area here, 66.10. Below 66.10 exposes the 50-day moving average that's acting as support that confluence with the minor swing low area of 17th of June and 11th of June. So this being set of a support zone at 65.90/65.80. All right, so that's for the Aussie dollar. So that pretty much sum up for the intraday short-term technical outlook on the dollar major pair. So moving that on next, let us focus on the major stock indices, starting from the Asia Pacific indices, the Japan 225 or the dollar yen as per se, not the dollar yen, the Japan 225 or the Nikkei, i.e. the Nikkei 225, a bit of tongue twisting over here. So the Nikkei 225 is a bit messy right now. So what we could see over here is that one thing positive that is the RSI has started to shape a higher low over here. It started to bounce in the last hour as we speak, and also the hourly candlestick on the Japan 225 has managed to form two bullish hourly hammer bullish reversal candlestick, so indicating some signs of short-term bullish momentum condition creeping back into the Japan 225, i.e. Nikkei 225 market over here. As one interesting over here is that yesterday's slide after the rebound that has taken shape on this Monday, it managed to actually reverse up. That means based on this last two bullish hammer candlestick right at the golden ratio of 61.8% Fibo retracement. So with that, I will use this minor congestion area slightly below the 61.8 golden ratio, like highlighted area, earlier on as my short-term pivotal support for today, okay, on the Nikkei 225 and the Japan 225. Okay, so this will be the short-term pivotal support First resistance to watch will be at the 50-day moving average over here that was taken down during yesterday's US session. All right, it broke down below the US session yesterday at 38,510 level. So above 38,510 level sees a retest on this Wednesday minor swing high at 38,750. All right, so these are the two near-term resistance level to watch if the Japan 225 is able to hold above the 38,240 on the intraday basis for today. All right, so still kind of I would say that it's more like a potential rebound within a complex range configuration that is still playing out on the Japan 225. But however, if it starts to see a hourly close or breakdown and a breakdown with an hourly close below 28,240, then this potential minor corrective rebound scenario will be invalidated to see the Japan 225 exposing the near-term support of 37,960, which is the lower limit of this complex range configuration. A breakdown below it sees a revisit on the 30th of May minus swing low at 37,630. Okay, so that's for the Japan 225. Moving on will be the Hong Kong 33 or the Hang Seng Index. So what I could see over here is that yesterday it managed to push up and the RSI has really hit the overbought region, but upon hitting the overbought region, there is no signs of a bearish divergence. But what I could see right now is in today's Asia session, as we are speaking, is doing a kind of a readjustment of this overbought condition that is met, and now hitting down back below the overbought region, potentially doing this minor pullback that could be taking shape right now. All right, so what we could see over here is that it's attempting to do this minor pullback. So as long as this, I will have a tighter key short-term pivotal support for today at 18,070, which correspond to this former minor swing high of 17th of June. Let me expand, 17th of June. And if we do the Fibo retracement of that last rallied up from last Tuesday intraday low all the way up to today's Asia session, that corresponds very closely to the golden ratio of 61.8% as well. Okay, so as long as this minor pullback that is unfolding right now did not surpass below 18,070, we will still maintain that short-term intraday bullish outlook on the Hong Kong 33, i.e. the Hang Seng Index. The next near-term resistance to watch out for will be at 18,730, which is the minor swing high of 5th of June and 6th of June. Above it, potentially sees 18,980, which also correspond to the 50% retracement of that previous down move over here. Okay, the golden ratio of 61.8% Fibo retracement as well. However, if we start to see a breakdown below 18,070, then this intraday bullish bias condition will be invalidated for today to see another round of choppy down movement to retest the swing low area of this Monday at 17,780. A breakdown below it exposes the next near-term support at 17,600, which is the minor swing low of 1st of May. Okay, so that sum up the short-term technical outlook for today on the Hong Kong 33. Moving on, next will be the German 30 or the German DAX. So the German DAX continued yesterday's to inch down lower by printing a series of lower higher. So no change, we'll still be using 18,240 as my short-term pivotal resistance. Still maintain that short-term intraday bearish bias on the German 30 index or the German DAX. First support level to watch will be the zone at 17,990/17,930. Only a breakdown below it may expose further weakness to the next near-term support at 17,850. However, if we start to see an hourly close breakout with an hourly close above 18,240, then this short-term intraday bearish bias will be invalidated to see another round of mean reversion corrective rebound to expose the next near-term resistance at 18,380, which confluence with the 50-day moving average acting as a support level as well, acting as a resistance as well. Above it may see the next near-term resistance coming in at 18,520, which correspondingly related to close to the 20-day moving average. All right, so that's for the German 30. Moving on will be the major US stock indices, starting with the US Wall Street 30. So I could see over here is that the US Wall Street 30 managed to actually, or the Dow Jones Industrial Average managed to actually breach above the 20-day and the 50-day moving average. And what we could see over here as we are speaking during the Asia session, the hourly RSI has started to shape a higher low as well and inching up above the 50 level mark. So indicating to us that there is some form of minor bullish momentum condition that is being flashed out in the US Wall Street 30. So from in terms of technical configuration, since the low of 30th of May, it continues to actually trade within this minor ascending triangle range configuration. Okay, look at my mouse over here, ascending range configuration, where the range resistance is being kept at the 39,090, 39,130 level by this by this swing high here of 7th of May, okay, 7th of June and 13th 12th of June that's being rejected twice. And so with that situation in hand, potentially for today, it could actually see a potential retest towards the upper limit of this minor ascending triangle range configuration that is being playing out. Why? Because it's being supported by the price movement, which is above the 20 and the 50-day moving average, and as well as the minor bullish momentum condition that's being flashed out by the hourly RSI. So with that, I'll be using 38,560 as my short-term pivotal support level. I don't want to put it so tight at the first support at 38,730. So 38,560 will be my short-term pivotal support level to watch. Flip to a short-term bullish bias, intraday bias for today within this minor ascending triangle range configuration that is playing out above 38,875, potentially exposes the minor ascending triangle range top of range resistance at 39,090 / 39,130. But however, if we start to see a breakdown below 38,560, then potentially this short-term intraday bullish bias will be invalidated to see further weakness as it float down towards the lower limit of this symmetrical triangle, is ascending triangle range configuration, pardon me, which is at the support level of 38,420 / 38,280 next. Okay, lastly will be the Nasdaq 100 is the strongest among the major currency, among the major stock indices that we cover. So what you could see over here, during Asia session today, it managed to break out above this swing high of 19,990. It has been taken out today. So with that, we will have a tighter key short-term pivotal support level that I have for today at 19,700 level. Okay, so what's this 19,700 level? Okay, so 19,700 level is actually the former minus swing high of this Monday, 17th of June, and as well also correspond to the lower limit of this minor ascending channel that I drew from 31st of May, and also the pullback support of that former upper channel resistance that I drew much earlier in light green from 19th of April. So it's roughly the two intersection over here. So this will be the, okay, a bit slower, sorry, 19,700 level. Okay, so as long as any minor pullback that is then surpassed below 19,700, short tighten key short-term pivotal support level that I have for the Nasdaq 100 for today, we will still maintain our short-term intraday bullish bias on the Nasdaq 100. Next resistance level to watch will be at 20,120 / 20,120 / 20,155. Above it sees 20,260 level coming next over here based on a cluster of Fibo extension level. Only an hourly close and breakdown below 19,700 will invalidate today's intraday bullish bias on the Nasdaq 100 to see a deeper pullback towards the next support level at 19,480. Below it exposes 19,240 / 19,100, which also confluence with the rising 20-day moving average over here. Okay, so that sum up for the short-term intraday technical outlook on the major stock indices. So now let us move now to the commodities. So two commodities highlight will be, number one will be spot gold. So firstly, gold XAU / USD. Still recall that yesterday we do have a neutrality stance or neutral bias between 2,300 and 2,338. But what we could see over here right now is that it seems to us that there could be some signs of short-term momentum coming back Why? Because price action, as we are speaking right now, is breaking above this downward sloping 20-day moving average, and also the hourly RSI has managed to shape a very clear higher low as well, and is now hitting above the 50 level mark. So indicating to us there is some form of this short-term intraday bullish momentum condition that has started to seep into XAU/USD. So with that, I will have a short-term pivotal support level to watch for today. Will be at 2,306, slightly above 2,300. What is this level? It's the minor swing low of 18th of June, and as well as this minor ascending trend line that I drew from the low of 10th of June. All right, so as long as this support level holds, pivotal support level holds 2,306, we will flip to a short-term intraday bullish bias with a potential upside trigger level at 2,338. Above this level exposes the next near-term resistance of 2,354, and above it sees the minor swing high of 7th of June at 2,386. Only an hourly close or breakdown below 2,306 will invalidate today's intraday bullish bias to see the continuation of this minor corrective decline sequence to unfold, to revisit or expose the medium-term support zone of 2,280/2,270. Okay, that's for XAU/USD. Lastly will be West Texas crude oil, WTI. So WTI yesterday we do have a bearish bias below 81.90 short-term pivotal resistance level. So still no change. Price action continues to refusing to break above the 81.90 short-term pivotal resistance level. And yesterday it starts to shape a bearish hourly Marubozu candlestick during the US session over here. And thereafter price starts to trade sideways. So if you look at the hourly RSI, continues to shape lower high over here. Okay, and right now it's looking to actually break below the 50 level mark. All right, so it seems to us that it's about to float down towards the oversold region. So indicating to us there could be still potential signs of a mean reversion pullback scenario to unfold towards the lower limit of this ascending channel that I drew from the low of 4th of June. So no change, still maintain that short-term intraday bearish bias for this potential minor pullback scenario to play out, using 81.90 as my short-term pivotal resistance for today. Near-term support level or support zone to watch out for will be at 79.45/78.90, which correspond to the 50-day, the 200-day moving average, and as well as the lower limit of this minor ascending channel and the former minor swing high of 12th of June and 14th of June. Only an hourly close above 81.90 will invalidate this intraday bearish bias of that minor pullback scenario to play out, to see the continuation of that short-term bullish trend to unfold. The next resistance level to watch out for will be 82.10, the upper limit of this minor ascending channel. Above it exposes 84.40. So what's 84.40? If we go back over here, is the minor swing high area of 25th of June and 26th of June. And if we do the Fibo extension of this ongoing rally, potentially we could see the extension of the fifth wave target at one time, which will correspond at 84.40. All right, so that sum up today's short-term intraday technical outlook on the various cross asset classes. So before we go, let's take a look at the economic calendar. What are the key data to look out for other than the Swiss Central Bank monetary policy meeting and the Bank of England meeting that going to be out later? All right, so other than that, over here during the US session, we do have some key data to look out for, will be surrounding the housing market. So housing stats for May will be out at 8:30 p.m. Singapore time. And thereafter, we do have the release of the US Energy Agency, the weekly stockpile release that could impact the WTI prices, which with the weekly crude oil stockpile change that is out later at 11 p.m. Singapore time. Okay, then going forward, down next will be a rather US quiet session. And right at 4 a.m. Singapore time, we have another Fed speak, which is Fed banking, will be speaking early tomorrow Singapore time at 4 a.m. So that actually sum up today's call it daily dose of market insights. So with that, I'm Kelvin here, signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.